Hey everybody, this is Ryan Mallory with the Stock Market Bubble Update. It's been a while. It's been like 2 months since I did my last update. Where have I been? Well, I moved my office, I moved my home, I got married. My family went from 2 people to 5 people. It's had a lot of change to it. But now I'm back, things have settled down, and I'm ready to start hammering these things out on the regular. Now we had the S&P 500, it was up 1.9% this week. The Russell 2000, it was up 2.1%, and the NASDAQ 100 was up 2.9%, while the NASDAQ Composite, it was up 2.8%. So it was a huge week, and that comes following a huge sell-off back on Monday morning. Quite the week, quite the recovery, quite the bounce. And what we saw this month was capital flowing into the what we are now perceiving as our safe stocks. That's your Apple, your Amazon, your Google, your Facebook, and your Microsoft. Money's flowing in there, and as a result, oftentimes you're seeing money flow out of the Russell 2000. And that can best be seen here where the S&P 500 is working on its 6th straight month of gains. You have the NASDAQ that is looking at moving higher for the 8th time in the last 9 months, but the Russell is actually looking at its first loss in over 10 months. So some big moves on the monthly chart. And what I think you're seeing also is that the street wants safety, not risk. Even though the market's sitting at all-time highs, the appetite for risk has never been lower. And what you're seeing the institutions do is they just keep raising the price targets of these big companies that they're in right now. That includes your FANG stocks, that includes stocks like Adobe and Nvidia. They're raising those targets, they're keeping it going higher while the rest of the market's going lower. And they're doing this because they want you, the retail, to keep on buying these stocks so that they keep making money with the shares that they already have on hand. Now, despite SPY being at all-time highs and it continuing to trade higher, it can be pretty frustrating because you get these strong dips and then you get this immediate bounce. But what happens in between that dip and that bounce is you get stopped out. And then when you get stopped out, you watch it just go right back up. And that can be really frustrating. It frustrates me at times as well. So I get the feeling. But this 50-day moving average that you're seeing on SPY, it continues to provide support for this market going forward, and it should be what we're watching the most on any kind of pullback going forward. The 50-day moving average. Now, it doesn't mean that it's a perfect pullback to the 50-day moving average. You'll see on multiple occasions, like what we saw in January and again in March, where it'll actually close below the 50-day moving average. You saw it again in June. But that next day, it rockets right back above the 50-day moving average and just continues to take off until it hits new all-time highs. Every single time. Yeah. We've seen it now happen 7 times where we test it and pop right back up to all-time highs all this year. But here's what I'm also concerned about. The resistance that's overhead. Because look, the last 3 times we've tested this resistance, we have seen sell-offs. And it takes the price right back down to the 50-day moving average. Well, guess what? At Friday's close, we are right back at that resistance level. And there's not much room for it to go until it starts to pull back again. So look next week for a potential pullback once we have a clean test of that resistance level. Now, once we hit that resistance level, if you start to see a strong rejection in price, that's a good sign to start taking some profits, take some money off the table, because there's a strong possibility we're going to retreat. Now, if that doesn't happen, let's say that we hit that resistance level and we keep pushing through, well, then all bets are off the table. And that resistance level now turns into support underneath. So you have a nice clean channel to follow here in 2021. If the bottom side of that channel breaks, guess what? There's not a lot of support underneath, and you're looking at about a 10% drop overall in the market. But as long as that channel holds, everything's fine. Now, before I get into the next index, I want to tell you real quick about my YouTube membership channel. That's going to give you all of my research that I do each and every week, all throughout the week, each and every day. I'm going to give you my list of daily trade setups, plus I'm going to give you the charts that I find the most intriguing. On top of that, you're also going to get weekly updates in addition to this video on the Russell 2000, on the NASDAQ 100, and the S&P 500. So check that out. Plus, you're going to get my weekly watch list at the end of each week so that you can go ahead and review and do your research over the weekend to prep you for the week ahead. And not to make this sound too good to be true, but you're also going to get updates each week on all the FANG stocks. So check that out down below. Click on the join button and become a member today. Now, the weakest index is clearly the Russell 2000. Man, the Russell 2000 has been trading in a sideways channel for a long time. This goes back to the beginning of the year, practically about late January. And so far, we can't break out of this range, and instead it just continues to pop off of the top and bottom ends of this range. Now, this past week was actually interesting because we saw a clear break of that channel. But what you always have to be careful of is on that initial pop lower, whether or not it's going to hold, because so much of the past 10 years we've seen price action test head and shoulders neckline. We've seen it test inverse cup and handle patterns. that breakdown level that it'll sneak a little bit below it, and then it'll rocket right back up to new all-time highs. But what we saw here on Monday and then the days that followed, a break below support, which made a lot of people start to get short, and then it rockets right back up for the rest of this week. There is still a declining trend line in place off of the late May highs. There's also the potential that this bounce peters out and we get the next leg lower. But what I don't like is the fact that IWM could potentially just stay in this range here, because that's where it's back at right now. It went right back above that broken support level, and now it's back inside that range. So very soon here, we need to see whether or not it's going to go right back up to all-time highs or whether it's going to continue the breakdown, because that's really where you're going to get some tradable action out of this index, whether or not it can break out of the range to the upside or break down and continue what it started this past week and drift much lower and provide you with a good shorting opportunity. But this is the index that is most prone to the downside because they don't have the FANG stocks in them. Without the FANG stocks, there's nothing holding it up like there is in the NASDAQ Composite and in the S&P 500. And that's why you see oftentimes there's this inverse relationship between tech and small caps, because when the small caps sell off, it tends to help the tech because the money is flowing into the safe big tech stocks, or what is perceived as safe, at the expense of the small cap, and vice versa. Now guys, I gotta show you this chart. This is the T2108. This is how oftentimes I judge the health of the market. This tells you the percentage of stocks that are trading above their 40-day moving average. Now you go back to December, everything looks good in December. You got the market rallying, but then all of a sudden, in the days, weeks, and months that follow, you start seeing this indicator drift lower. That means less and less stocks are participating in this rally that continues to make new all-time highs. It makes trading a lot more difficult too, because there's not as many stocks that are breaking out with the overall market. And now we're at critical levels here. We hit 19% of stocks that were trading above their 40-day moving average. That means there's a lot of weakness in this market. Now it did recover later this week and go back up to 33%, but even still, with the S&P 500, with the NASDAQ 100, trading at all-time highs, you have the T2108 showing you that 67% of stocks are trading below their 40-day moving average. That is a huge, huge red flag, because more times than not, it's going to result in a big move lower. Because here's the thing, with a market that's been hitting all-time highs as many times as we've seen this year, we should be sitting at an 80 or 90% reading, like what we saw in May of last year, like what we saw in December of this past year. Instead, we're at 33%, not 80 or 90. That's a big problem, because there's hardly any stocks participating in this market, and it's more and more becoming a market that just involves your FANG stocks, Adobe, Nvidia, and just the big tech stocks as a whole. And now look, we're already in earnings season, but next week is the big kahuna, man. You got the top 7 stocks reporting next week, and all of them have a huge influence on the NASDAQ and on the tech sector. So if these tech stocks don't come through, or if there's a sell-off by the street, regardless of how good the earnings are, it's going to weigh very, very, very heavy on the NASDAQ and the S&P as a whole. So you want to keep that in mind. Now, if the market has a good reaction to the tech stocks, man, this thing could really ratchet up very, very fast and blow right through that resistance on the S&P 500 that I was telling you about earlier in this video. As we start to approach that resistance level on the SPY, what you really want to do is be careful that you're not loading up going 100% long now as we hit this resistance level. Instead, this is the time where you want to start lightening up your positions a little bit, or at the very least raising those stop losses, so that if there is a pullback, you're still coming away with the bulk of your gains. Now on the market pullback, you don't want to try to catch the falling knife, because you know what, we could test that bottom channel and we could test that 50-day moving average, and it may not hold, and we may actually get finally a big move lower. But while that's happening, while we're pulling back, you want to start finding those stocks that are going to be a really good bounce opportunity, because when the market's pulling back, you're not necessarily looking out for the breakout candidates, you're looking for the bounce candidates at that time. So start looking for those when we start to pull back. So for next week, you're looking at that resistance level that we're quickly approaching. If we get a sharp rejection and we start moving lower again, you want to start watching that 50-day moving average and whether or not the market can hold that once again. Because I firmly believe that there will be at the very least a bounce attempt if we do retest that level again, because a lot of people have their eyes on that 50-day moving average. So you want to keep an eye out for what everybody else is looking for as well. And remember, you don't have to be 100% long or 100% short all the time. When it becomes less certain, or when the reward isn't at least double what the risk that it takes to put on a new position, lighten up a little bit. You don't have to have a big portfolio of stocks all the time. Trade what you're comfortable with, trade within your risk parameters. And if you enjoyed this video, make sure to give it a like And make sure to subscribe to this channel. That's how I can keep pumping out these videos to you guys each week. I'm glad to be back. I'm glad now that I'm a married man and the move is all finished. And I look forward to doing more and more of these videos with you guys. And make sure to join the YouTube membership channel here that I have and get all of my market research each and every day. And tell me down in the comments below, what were your best trades from this past week? What worked the best for you with this market bounce? I look forward to hearing from you guys. Thank you, and God bless.